Imagine waking up to find $1 trillion, 0 cents, erased from the U.S. economy. Not because of war, not because of a recession, but because another country froze everything. That's exactly what China just did. Wall Street is in shock, American corporations are scrambling, and Donald Trump, the man who once prided himself on economic dominance, is now watching his financial foundations crumble. This isn't just a move on paper. It's an economic missile, and it could change the future of U.S. power forever. In a stunning and unprecedented move, China officially announced a full freeze on all U.S. investments within its borders. This isn't just a few companies getting banned, it's a complete lockdown on American financial interests in China. Effective immediately, Chinese regulators halted all new U.S. investment approvals, froze active investment projects, and suspended ongoing mergers, acquisitions, and joint ventures involving American firms. Billions of dollars that were once flowing into China's tech, real estate, manufacturing, and financial sectors have now been frozen in place, unable to move forward or even move out. But the freeze didn't stop there. China also tightened capital controls to restrict American companies from pulling out their existing profits. Multinational giants like Goldman Sachs, Apple, Tesla, and Nike suddenly found themselves trapped in a tightening net, with no clear legal path to recover their assets. Why such a drastic move? According to Chinese state media, this was a necessary defensive measure in response to increasing U.S. sanctions, tariffs, and hostile policies aimed at containing China's rise, especially in critical sectors like technology and energy. In Beijing's eyes, investment warfare is now fair game. American officials were caught off guard. While tensions between the two countries have been rising for years, few believed China would actually target Wall Street, the beating heart of America's economic empire. But now, with over $1 trillion, 0 cents, in U.S. investments either frozen or at risk, the financial shockwaves are already being felt across the globe. Major stock indexes immediately plunged, hedge funds started selling off Chinese assets, and corporations warned shareholders of massive losses. This isn't just a diplomatic slap, it's a calculated economic punch aimed straight at America's wealth and influence. China just sent a brutal message. If you want a financial war, we can play that game too. And for the U.S., especially Donald Trump's economic legacy, the nightmare is only just beginning. To understand the impact of China's investment freeze, you need to realize one thing. The U.S. economy isn't just built on products, it's built on money movement. Wall Street's power comes from the ability to move trillions of dollars across borders, funding businesses, buying assets, and building influence globally. For decades, American investors have poured money into China, not just chasing profits, but securing strategic footholds inside the world's fastest-growing economy. By suddenly freezing U.S. investments, China didn't just block future profits, it severed one of America's strongest economic lifelines. Billions of dollars tied up in Chinese tech startups, green energy projects, infrastructure developments, and consumer brands are now frozen, with no clear timeline for recovery. Top U.S. firms that were expanding aggressively into China, firms like Tesla, BlackRock, J.P. Morgan, and Intel, now face staggering setbacks. This is a nightmare scenario for American financial giants because profit access cut off. Companies can't bring their earnings home. Asset values crumble, investments become toxic, slashing portfolio values. Investor panic, confidence collapses, leading to mass sell-offs and portfolio rebalancing. Global reputation damage. America's financial reliability is questioned when even its biggest investments can suddenly be trapped abroad. It's not just a punch to the gut, it's a systemic attack on the very foundation of U.S. financial strength, global investment dominance. What makes it worse? China's move comes at a time when the U.S. economy is already battling high interest rates, inflation, and a looming debt crisis. Losing over $1 trillion 0 cents overnight isn't just a setback, it's a potential catalyst for a major economic downturn. The ripple effects are global. European, Asian, and Middle Eastern investors are now rethinking their exposure to American-led markets, fearing retaliation or instability. Trust, once America's greatest currency, is now showing signs of cracks. In a single stroke, China didn't just freeze money. It challenged America's financial empire and forced Wall Street to realize that in this new era of economic warfare, even giants can bleed. The moment China announced the freeze, Wall Street went into a tailspin. Major U.S. stock indexes like the Dow Jones, NASDAQ, and S&P 500 immediately plunged, wiping out billions in market value within hours. Companies with deep exposure to China, such as Apple, Tesla, Boeing, Starbucks, and major banks like J.P. Morgan Chase, saw their stocks tumble the hardest. Investment firms and hedge funds that had heavily bet on China's growth are now scrambling. Assets once considered high growth opportunities are now frozen, devalued, or completely inaccessible. Portfolio managers are being forced to sell off Chinese-linked assets at massive losses just to stabilize their balance sheets. For individual investors, retirement accounts and mutual funds tied to global markets are taking unexpected hits. Ordinary Americans who have 401k plans, pension funds, or stock holdings in big firms are seeing the impact, even if they don't realize it yet. The freeze has also triggered a dangerous wave of market uncertainty. Banks are tightening lending, corporations are delaying expansion plans, and private equity firms are reassessing foreign risk exposure. And this is just the beginning. If confidence in U.S. China financial relations continues to erode, we could be looking at a broader liquidity crisis, not just in New York, but in London, Frankfurt, Tokyo, and beyond. In simple terms, when Wall Street panics, the whole world feels it. And right now, Wall Street isn't just panicking, it's bracing for impact. Donald Trump has always tied his political brand to one major promise: economic strength. During his presidency, he boasted about stock market highs, record low unemployment, and tough trade deals aimed at putting America first. But today's crisis strikes directly at the heart of that legacy. During Trump's time in office, the U.S. China relationship grew more hostile than ever before. Trade wars, tariffs on hundreds of billions of dollars of goods, technology bans. It was a full-blown economic battle. Trump's aggressive stance was popular with many Americans, but it deepened mistrust between Washington and now, years later, China's freezing of U.S. investments can be seen as the long-term retaliation to those very policies. While Trump is no longer president, his fingerprints are all over the current tensions. Critics argue that the seeds of today's financial disaster were planted during the intense tariff wars he launched. Wars that hurt not just China, but also American farmers, manufacturers, and now, investors. Supporters, however, see it differently. They claim Trump's warnings about China's growing influence were correct, and today's aggressive Chinese actions only prove that America should have decoupled sooner. Regardless of perspective, one thing is clear. The fallout from China's freeze will be linked to Trump's economic narrative for years to come. If Wall Street crashes, if corporations collapse, if investors lose big, Trump's America First strategy may be remembered not as a triumph, but as the spark that ignited a global financial storm. And that's a political nightmare no campaign slogan can easily erase.
The immediate future is uncertain, but one thing is obvious. The world is standing at a dangerous crossroads. If China maintains the freeze or tightens it even further, the U.S. could retaliate with even harsher sanctions. This could escalate into a full-blown financial Cold War where both nations weaponize trade, investments, and currency power against each other, pulling the rest of the global economy into the fight already. Whispers of a global recession are growing louder. Banks are warning of liquidity shortages, multinational corporations are revising their earnings forecasts downward, and emerging markets are bracing for capital flight as investors rush to find safer ground. Meanwhile, American political leaders face immense pressure to respond. Talks are calling for immediate economic retaliation, freezing Chinese assets in the U.S., blocking Chinese companies from Wall Street listings, and tightening export bans on critical technology. but there's a risk. um, every move the US makes could trigger an even more aggressive counterstrike from China, including dumping US Treasury bonds or cutting off rare earth supplies vital for American industries. In short, the world could soon see supply chains frozen, markets in free fall, duration, a new era of global economic fragmentation. This isn't just about Trump, Wall Street, or Beijing anymore. It's about the future of global power itself and whether two economic superpowers can pull back from the brink before it's too late. One thing is certain: the era of easy money and smooth globalization is over, and a new, much colder financial world is just beginning.